Now I want you to take a look at this. It's for my mentorship program, it's for my students, and it's part of the entry techniques. Okay, and I always say that we combine a lot of things to trade. Now over here, we said when we have an upward trend line, this is actually a buying cycle, and then we can draw a trend line like this, right? Can draw a trend line like this, can actually take it this way, right? And this market actually made a bearish move from this point. Okay, from this point it made a bearish move towards this place, and then hitting what? Hitting a support, because now this place is a support. When the market was ascending, this place was a resistance to it. Okay, when it got to this point, it was a resistance to it, but when it eventually broke it, got to this point, it descended, coming to make a touch to form a kind of low point here, which is a higher low. Okay, higher low. Okay, it hit this. Of course, this place has become a support to it, and then also hitting an upward trend line, and then sorry about that settled. Aside that, it started giving certain candlestick pattern. This is 30 minutes time frame. Let's check 1 hour time frame. It started giving certain candlestick patterns. Okay, now this is on 1 hour time frame. This, I saw it and I decided to enter this trade on 1 hour time frame. This first bearish candlestick here, the red candlestick, okay, look more like inverted hammer. Okay, it's not doji, it's an inverted hammer. The second one also inverted hammer. Okay, the third one, which is also green. The first one is, we are considering this particular three candlestick. The first red one, which is inverted hammer, the second, which is green, is also an inverted hammer, and then the third one, which is green, is also a doji. That looks more like a doji, though not a perfect doji. These are the things I'm talking about. Let me quickly show you. This one, then two, then three. Three, beg your pardon, three. Yes, the middle one, the small one. Okay, now we combine a whole lot of things to trade. First and foremost, the trend line, then the resistance that have become a support. And remember, I told you that there are two ways you can take a trade like this. For someone who understands market structure, I said it's possible to take a trade immediately. Okay, immediately. Now at the close of, this is where you should have taken the trade if you understand market structure here. Okay, and then the stop loss would have been below this place, below here. Okay, now I think it's clearer when we go to 1 hour time frame. Okay, now this would have been the entry, perhaps at the opening of this candle, the small candlestick, although it later came down. Okay, but your stop loss would have been below this place. Okay, and then you would have taken, this is the second candlestick now, which is close to 2 hours, right? Would have been 2 hours on this trade. Now this place actually gave us a confluence. Now you remember that this is a trend line, upward trend line. This is a resistance, and then look at the fractals introduced here. All this gave us high probability that price will push up at least to the main resistance level here. This is the main resistance level. Okay, so even if it's going to spike now, it will spike a little because there's also a resistance here. It will react, but it will get to maybe around this place to retest that resistance level, right? So, and aside that, if we go to even lower time frames like 15 minutes, you see that there are projections. Now even from the 30 minutes, there are rejection candles. Now, I did tell you that even though there are rejection candles with long wicks, you need to start analyzing the kind of candlesticks that are there. Do they signify price, that price will move to the bullish side, or there's a continuation? Now, when we begin to analyze the candlesticks that are developed here now, you discover that from here, starting from here, after this bearish move and price hits this trend line and the support, okay, this place is not a support because it has broken it. When it was ascending, it was a resistance to it. Okay, now when price came down and then it made a touch on this trend line, it gave us the first green candlestick that looks like a bullish pin bar but not a perfect one. Then the red candlestick you are seeing also is a bullish pin bar, but is not a perfect. Now the third candlestick, which is green, is supposed to signify, because that one opened and closed bullish, okay, as a normal candle. Now this third one that has weak projection to the upside. Now you remember the location of candlesticks, which I say is the most important thing. Where is it located? This, if it were to appear here, it would have been after this bullish move, and that would have been a bearish pin bar signifying price rejection, and then that there is a shift in momentum towards bearishness and there's a potential price reversal. But then it appeared after a bearish move. Okay, I'm talking about this green candle with weak projection that has fractals on it. Now, because it appeared after a bearish move and price hitting a support, then it is called inverted hammer. Inverted hammer. And that confers it another interpretation, which will now signal a potential bullish reversal. I don't know if this point is clear. Now, after that, we had another inverted hammer as well. Then the third green candlestick here is a doji. Why the fourth green candlestick here, okay, this candlestick before this long bullish ones, okay, is a bullish pin bar. Okay, this is the one I mean. This is a bullish pin bar. Now this is a bullish pin bar. This is a bullish pin bar. And what later happened? Boom. All these candlesticks, even though they have projections, they signal or they indicate bullish reversal. And what later happened? Boom. Look at the move is still on. This is 1 hour, 2 hours plus now. Okay, it's 1 hour plus, right? This is 30 minutes. This is 30 minutes. This is getting to 40. So 1 hour plus. Okay, so that's it, guys. So you need to learn it, train your eyes to be able to spot all this. Now, aside that, I also spotted another thing. Okay, now price made a bullish move. Now when it got to it was making higher highs and higher lows. Now it got to this point and then he found resistance, but when he broke it, he came back, okay, and then broke this high point that he made, broke it to retest this low point. So but then he did not break the low again, and that's why this place is still a kind of a higher low to this. Okay, this place is higher than this place. This was a low point, this was also a low point, but this low point is higher than this. So that's, it came to retest it and then reverse from that point. So we combine a whole lot of things to trade, and that's exactly what I want you guys to take note of. All right, so the task remains you training your eyes to be able to identify the moves of the market at every point in time. That's the way to gain mastery over whatever pair you are trading. Okay, take note of that.